Hello and welcome to BQ Prime. You're watching Earnings with BQ. I'm Monal Sangvi and our guest today is Mr. Siddharth Mittal, the MD and CEO of Biocon. Welcome to the show, sir.
Thank you.
So the profits have fallen 30% and are below estimates. However, revenues have jumped 60%. EBITDA is up 79% year on year. Margins have come in at 20.9, which is below street estimates of 24.7. Uh, what exactly has impacted the profits first? And then we look at the broader business aspects.
Sure. So thanks for that question. So as you rightly said, the business has performed well at the top line level. We did grow 60%. Biosimilars business grew more than 100%. Syngene or research services business grew 25, while generics grew 15%. Now, the sum total of the growth in all our businesses has not reflected in our margins, unfortunately, because we had one-off rebate or a discount that we had to give to one of our customers in the US. This is for pegfilgrastim for a deal which was done by Viatris a couple of quarters back. And this effect of this one-time discount did impact the profitability, and we do not, of course, expect this to be an ongoing affair. And that, of course, has shown up in lower EBITDA, core EBITDA, PBT, and PAT margins.
Okay. So this year, from what I understand from the press release that was put out, there has been a lot of leg of growth in the Biocon biologics business because the Viatris acquisition. So what are the plans that we have for this acquisition? I mean, considering now that the base is already upped, what are the plans going forward in the future years? That's a question, and then I'll come to the other one.
Sure. So there are three-pronged strategy that we have. One is, of course, we have to integrate the business that we have acquired. So we finished integration of 70 countries on July 1, and rest of the calendar year we expect to transition the business from Viatris to Biocon Biologics for remaining countries, including US and Europe. So I think that's very important that we transition that business at the earliest possible. The second is to grow our existing products in all our markets, whether it's US, Europe, or emerging markets. We have, as you know, three products in the US, and Semglee or Glargine, Trastuzumab, and Pegfilgrastim. We've seen a good growth in these three products over the last year, and we expect to continue to grow these products. And more, I would specifically call out Glargine, where we have seen a good data come out even in July, where we have seen the market share go up, and so is the case with Pegfilgrastim, which now is the biggest product in the US of all the different brands available for pegfilgrastim. So Biocon Biologics Fulphila is the number one pegfilgrastim in the US. So we continue to gain market share. That's one of our focus areas. Again, in Europe, we have seen market shares go up for the 7 products which are commercialized, and in emerging markets. Now, the third growth driver, of course, would be the new launches. We recently announced launch of biosimilar adalimumab in the US, and though this will be a slower ramp up over the coming years, but we expect to get approval for bevacizumab and aspart also probably at the end of the fiscal year, when we should be in a position to launch those products. Now, all the second and third pillar will, of course, add some value to our business this fiscal, but we see these to be a much bigger growth driver in the next fiscal year.
Okay. Then, so how would you look at the margins for the year?
I think, as I mentioned, that we had a one-time impact in Q1, and we do not expect this to continue. And we are hoping that we will get back to the mid-30s core EBITDA margin for our biosimilars business in the coming quarters.
And so on an overall basis, including generics and the research services.
Yeah. So generics and research services margins should be at the similar level as we have seen in Q1. So the percentage should not change significantly. Of course, both the businesses will continue to grow in the coming quarters. So in an absolute term, there will be a margin growth.
So we're expecting a mid-30s margin for the whole business? Or a mid-20s?
Well, our core EBITDA margin for biosimilars is mid-30s, but when you look at the EBITDA margin is roughly 20 to 23%.
Okay, that's the guidance for the year. Okay, sir. Um, Also, in terms of new product pipelines, we had a couple of products that we were supposed to launch also. Where are we on the approval front? Also, we've upped the R&D expense by 59%. So while you said that a couple of new products will be out by the end of this year, are we going to continue the R&D expenditure at a similar level? And if yes, where is that going towards what line of business? And what do you see on the generic front? Are we seeing a lot of price erosion there, or there's a lot of stability again?
So let me take one by one. So let me answer the R&D question first. Our guidance is around 12% of the revenues ex engine. That should be our overall R&D spend for the year. Now, as you rightly said, of course, we have got products which are under review with the FDA where there are no R&D expenses, but we are incurring R&D expenses for a future pipeline. We have biosimilar ustekinumab, biosimilar denosumab, which are in phase 3 clinic, global clinic, and that's where bulk of the expenses are coming in from. There are other development pipeline which is also contributing to the spend. Apart from that, of course, we have R&D spends in our generics business for our pipeline, and we do definitely expect the R&D spends to continue to grow over a period of time, because that's the investment we need to do for our future growth. Now, in terms of the pricing pressure in the generics business, we have seen mixed trend. We have seen some stabilization or normalization in the last few months, and this is primarily because of the supply disruption that US has seen. We have seen some stock outages in the US, and that's kind of like giving the stability that we were looking at. Now, that doesn't mean there is no price erosion. It's just it's less steep there compared to what it was in probably last year. So we definitely expect that this trend of price erosion is not going to change, but it's going to get a little bit more less steeper in the coming quarters.
Also, this question is from the fact that quarter on quarter, our profits fell by quite a huge amount, I think around 68%. So while of course there is an element of a one-time expense, as you mentioned, I want to understand whether there was some reversal on the pricing front, or have there been certain costs that have gone up? Uh, what exactly has led to the drop, the sequential drop? Just to understand better.
So one, of course, is the effect of the discount that we had to give to our customer for the prior quarters, I would say, prior quarters sale. And that's led to the main impact on the quarter-on-quarter dip. But apart from that, there are, we have had, of course, salary increases or the merit increase that we give to our employees. We have 18,000 employees. They all undergo pay revision in April. So that also results in an increase. But apart from that, there has been no significant increase in the cost.
Okay. Also, so how are we looking at the business mix going forward? Do we expect a higher share from biosimilars, biologics and biosimilars? Also, there's some talk about the listing of the biologics arm separately. So when is that going to happen, and how do you view the whole thing panning out over the next year or over the next 2 years?
See, biosimilar will, of course, be one of the main growth drivers for the group. And now, we've seen a good growth coming in organically. Of course, the inorganic growth has given the boost in the reported revenues. But the organic business from here on, we expect it to be a good double-digit growth. Of course, Syngene has guided for a high teens growth, and in generics business, we are looking at a mid-teens kind of growth. So when you look at all the three businesses, I expect biosimilar to contribute to a larger share over a period of time compared to two other businesses. Now, in terms of the listing, yes, that's on the cards. We've, of course, just completed the acquisition. As I've mentioned, we have to complete the transition. We need to get a couple of new product approvals, which are under review with the FDA. We need to increase our market share. So there are a couple of important milestones which are ahead of us, including debt reduction, which I forgot to mention. And once some of these milestones are achieved, we'll be in a better position, depending on the market's scenario, to do the IPO. But at this stage, we are, I would say, definitely 12 months away from that point.
So what is the update on the Malaysian facility? We had received a couple of observations on the facility. So what sort of revenues are we seeing from that, and what sort of impact are we expecting? What is the ongoing conversation with the FDA?
So let me remind you from Malaysia, apart from servicing emerging markets, the product that we currently commercialize in the US is Glargine. We, of course, do commercialize Glargine and Aspart in Europe from that facility. Now,
Mm.
the FDA had inspected this facility in July and given us 6 observations for drug substance and drug product and 2 observations for devices. This was a post-approval and a surveillance audit which was triggered by Glargine. And we are in the process of responding to the 483s, and we expect FDA to take our responses favorable, and give decide on the EIR status accordingly. And once we expect a favorable response, we also expect that as part approval should come through from FDA, which has been pending because of the facility inspection. And of course, it's something which I should mention, that there were no data integrity issues. These were systemic observations, more procedural related, uh, rather than any systemic issues.
So we expect a clearance. And so by when do we expect the approval for Aspart then? If this
See, it'll be
clearance were
difficult
to
to
go through.
put a time to the approval, because, as I mentioned, that we'll respond to the 483. The FDA
Mhm.
will typically review the responses and then determine are they satisfied with our response or not, and then make a decision. And we hope that they will consider our decision favorably and give a decision on Aspart to us.
Okay, sir. Let's hope that's a positive then.
Yes.
Overall, sir, what sort of growth do you envisage for Biocon for this year and the next year?
See, I would say that definitely we are looking at a high double-digit growth, which is high teens kind of growth, because biosimilars business has guided for a good double-digit growth. And I'm saying this is on an organic basis, even if I exclude the impact of the acquisition. And
Okay.
Syngene, as I mentioned, has guided for a high teens growth, and with generics growing mid-teens, we can look at high teens to low 20s growth.
Thank you so much, sir, and all the best.
Thank you.
It
Thank
was a
you.
pleasure speaking to you.
Same here. Thank you.